China's push to dominate the digital currency space is one of the most strategic moves in modern financial history. While the rest of the world debates regulations, China is already testing, deploying, and perfecting its own central bank digital currency, the digital yuan. This isn't just about convenience or technology. It's about power, control, and global influence. And the question everyone in the crypto world is asking is simple: what does this mean for Bitcoin? For years, the United States has maintained financial dominance through the dollar. It's the global reserve currency, used in international trade, oil markets, and most financial systems. But China's creation of a government-backed digital currency challenges that system directly. The digital yuan allows transactions that bypass the SWIFT system, meaning less dependency on the US dollar. In theory, if more nations adopt or trade using China's digital currency, global demand for dollars could drop. When trust in the dollar weakens, investors often look for alternative stores of value. That's where Bitcoin comes in. Bitcoin thrives in moments of uncertainty. It's borderless, decentralized, and not controlled by any government. If China's strategy accelerates a shift away from US monetary dominance, Bitcoin could benefit as the neutral global asset. Some analysts even suggest that Bitcoin could become the digital equivalent of gold, a hedge against both East and West power plays. But there's another side to the story. China's stance toward decentralized cryptocurrencies has been strict. Mining bans, trading restrictions, and control over exchanges have pushed most Bitcoin activity out of the country. The digital yuan represents the opposite of Bitcoin's philosophy: total centralization, total surveillance, and total government control. While Bitcoin empowers individuals, China's digital currency empowers the state. If China succeeds in exporting its digital currency to other nations, Bitcoin might face stronger scrutiny. Governments could promote their own digital systems and discourage the use of independent crypto. In that sense, the digital yuan could slow down mainstream Bitcoin adoption, at least temporarily. Yet history shows that suppression often strengthens decentralized movements. The more governments try to control digital money, the more people turn to alternatives like Bitcoin. The global reaction will define the next chapter. If developing countries embrace China's model, we could see a divided world, one side running on state-backed digital systems and another running on open, decentralized networks. In that world, Bitcoin becomes a form of financial resistance, a tool for those who seek freedom from monetary oversight. Economists warn that this digital currency war could trigger a new wave of volatility. Currencies backed by political agendas tend to create uncertainty. Investors might respond by moving their assets into Bitcoin, perceiving it as safer in the long run. Others argue that if governments adopt strict regulations, crypto markets could face short-term pressure. Still, Bitcoin has one advantage that neither China nor the US can replicate: trust built through code, not politics. It doesn't need military power, central banks, or trade alliances. Its security lies in mathematics and consensus. No matter which superpower wins the digital currency race, Bitcoin will remain outside their reach. In 2026, as geopolitical tensions rise and digital currencies gain ground, Bitcoin's narrative grows stronger. It represents neutrality in a polarized world. For investors, this means that Bitcoin could benefit indirectly from China's ambitions. As more nations digitize their economies, public understanding of digital money will increase. That exposure alone could drive millions of new users toward Bitcoin. In conclusion, China's digital yuan could reshape the global economy, but it won't erase Bitcoin. If anything, it will highlight why a decentralized alternative is essential. The future might belong to multiple digital currencies, each serving a different purpose. But when it comes to independence, scarcity, and global trust, Bitcoin stands alone.